Welcome back to our art investment series. In today's video, we're diving into Chapter 11, the role of art in diversifying investment portfolios. Art has long been regarded as a tangible and emotional investment, but it's also increasingly recognized as a powerful tool for diversifying financial portfolios. In this chapter, we'll explore how adding art to your investment portfolio can help reduce risk, increase returns, and provide a hedge against market volatility. We'll break down the key benefits of art investment, the ways it behaves differently from traditional assets like stocks and bonds, and how to build a diversified portfolio that includes both art and other alternative investments. If you've been considering art as part of your broader investment strategy, this video will provide insights on how to integrate art into your portfolio for maximum financial and emotional gain. Let's dive into the role art can play in the diversification of your investments. Art has always been a valuable asset for collectors and investors alike, but in recent years, it has become an increasingly popular alternative asset class for financial portfolios. This is particularly true for high-net-worth individuals, institutions, and even family offices looking for ways to diversify their investments and reduce risk. When we talk about diversification, we mean spreading your investments across different asset classes to reduce the risk of any single investment negatively impacting your overall portfolio. Traditional investments, like stocks and bonds, are highly correlated with the financial markets, meaning that when the market goes up or down, these assets tend to move in the same direction. By contrast, art behaves differently. Art is considered a non-correlated asset, meaning its value does not always move in sync with financial markets. While stocks and bonds can be influenced by factors like interest rates, inflation, and economic growth, art is often driven by different forces. The value of art is affected by factors like cultural trends, the artist's reputation, and even emotional appeal. These unique characteristics make art a valuable addition to any investment portfolio, offering the potential to reduce risk and increase returns, especially in times of market uncertainty. For example, during economic downturns when financial markets are volatile, art tends to be more resilient. Even though some segments of the art market may experience price drops, high-quality art, particularly from well-established or iconic artists, often holds its value and can even appreciate in times when stocks are declining. This makes art an excellent hedge against inflation, currency devaluation, and market volatility, which is why institutional investors, including pension funds and endowments, have been increasing their exposure to art over the past decade. To better understand how art can diversify your portfolio, it's important to consider the different types of art investments available. Art isn't just about buying paintings by famous artists. There are multiple asset classes within the broader art market that investors can consider, each with its own risk profile and potential for return. Here are a few key categories of art that you can include in your investment portfolio. Contemporary art. This category includes art from living artists or those active in recent decades. Contemporary art has become one of the most profitable sectors of the art market, with works by artists like Jeff Koons, Banksy, and Yayoi Kusama fetching millions at auction. Investing in contemporary art offers the potential for high returns, but also carries higher risk. The market for emerging artists can be volatile, and prices can fluctuate dramatically. Still, it's a sector with significant growth potential, especially if you manage to invest early in an artist's career. Modern art. Modern art typically refers to works created in the late 19th and early 20th centuries, including artists like Picasso, Van Gogh, and Warhol. This sector of the market is typically less volatile than contemporary art, and works by well-known artists often appreciate steadily over time. Modern art also tends to have more provenance, meaning that its history is well documented, which adds to its value. Old masters and classical art. This refers to artworks from earlier periods, often created by well-established artists such as Rembrandt, Vermeer, or Caravaggio. Old masters are considered blue-chip investments. Artworks from these periods are highly sought after and tend to hold their value well, even during market fluctuations. The downside is that they can be very expensive to purchase, and the market can be less accessible for smaller investors. Photography. While photography is often considered a niche category within the art world, it has been growing as an investment segment. Photographs by renowned photographers such as Ansel Adams and Cindy Sherman have been selling for high prices at auction, and the market for photography as an investment is steadily expanding. Sculpture. Sculptures, like paintings, are tangible assets that can appreciate over time. Bronze sculptures, in particular, have historically been among the most sought-after pieces of art. Whether investing in works by Auguste Rodin, Henry Moore, or Jeff Koons, sculptures are a great way to diversify your collection and potentially benefit from the rising demand for three-dimensional art. Digital art and NFTs. The rise of non-fungible tokens, NFTs, has introduced a new and exciting investment opportunity in the digital art world. NFTs are blockchain-based digital assets that allow for the ownership of digital art and collectibles. The NFT market has exploded in recent years, with works by digital artists like Beeple selling for millions at auction. While the NFT market is still in its early stages and comes with risks, it is undoubtedly a growing sector of the art world and can serve as a unique addition to a diversified portfolio. Now let's talk about how to incorporate art into your broader investment strategy. While art is an excellent tool for diversification, it's important to remember that it should not be the sole focus of your portfolio. Art should make up a small portion of your overall investment strategy, particularly when you're just starting out. A well-diversified investment portfolio generally includes a mix of traditional assets, stocks, bonds, real estate, and alternative assets, art, commodities, real estate, etc. The key is to ensure that you're not overexposing yourself to any one asset class. For instance, while art can be a stable and profitable investment, it's important to keep the bulk of your portfolio in liquid assets that are easier to buy and sell. Real estate, stocks, and bonds are all more easily traded than art, which can take months or even years to sell, especially if it's a more niche piece. One way to get started with art investment while maintaining a diversified approach is to allocate a fixed percentage of your portfolio to art. For example, some financial advisors recommend allocating between 5% and 10% of your portfolio to alternative assets like art, commodities, or real estate. This allows you to tap into the potential of art investment without putting all your financial eggs in one basket. You should also consider gradual entry into the art market. Instead of purchasing high-end, expensive pieces from established artists right away, consider starting with emerging artists or works from smaller galleries. These pieces are generally more affordable and offer significant growth potential as the artists gain recognition. As your portfolio grows, you can gradually expand into more established markets. Another key aspect of diversifying your portfolio with art is understanding how it can serve as a hedge against various economic factors. Art has long been considered a hedge against inflation and a safe haven asset in times of market turbulence. For instance, when stock markets crash or bonds lose value, art often holds steady. In times of high inflation, when the value of currency declines, art, particularly blue-chip art, tends to maintain or even increase its value. This makes art a valuable asset for investors looking to protect their wealth. In fact, over the past few decades, art has outperformed stocks and bonds in some instances, with works by well-known artists seeing steady appreciation. During financial crises, when the value of traditional assets fluctuates, art often acts as a more stable asset. This is why many institutional investors are increasingly turning to art as part of their strategy to hedge against financial risks. Additionally, art can provide a store of value. Unlike cash, which can lose purchasing power due to inflation, art is a tangible asset that retains intrinsic value. Whether it's an iconic painting or a sculpture by a renowned artist, its value is not tied to the performance of any one economy or currency. As we wrap up this chapter, it's clear that art has a significant role to play in diversifying investment portfolios. Whether you're a seasoned investor looking to add alternative assets to your strategy or a beginner looking to start building an art collection, incorporating art into your portfolio can offer substantial rewards. Remember that art is a long-term investment and requires research, due diligence, and patience. While the art market can be volatile and unpredictable at times, it can also provide unique opportunities for growth and stability when approached strategically. If you enjoyed this video and found it helpful, be sure to like, subscribe, and share it with anyone interested in learning more about art investment. Drop your thoughts or questions in the comments below. We'd love to hear from you. Thanks for watching, and we'll see you in the next video.